Welcome to this week's technical analysis from Train to Invest for the week of July 5th to 9th. My name is Joel Chandran, and we're going to take a look at the TSX, Focus 5 stocks, gold, silver, oil, and several commodity ETFs. Here is the 3-year weekly chart for the Toronto Stock Exchange. As you can see on the right-hand side of your screen, 1, 2, 3 weeks of declining highs and lower closes. Not exactly the trend we want to see, but after the run-up from all the way past before July, 1, 2, 3, 4, 5, 6 weeks of continuous uptrend, a contraction is expected. Looking at the MACD and the MACD histogram, I gave it a green circle because the MACD is above the signal line, and if you look really closely, the histogram bars are positive, but they're quite small. As a lagging indicator, it is measuring what has happened in the past more so than the leading indicators or momentum indicators, such as the RSI and stochastic, which are red, indicating that momentum has or is leaving the index on the weekly side of things. And that's due to this 3-week decline. With the long weekend last week, that is also an issue. Extra day off also led to increased volatility, and we will see a lot of movement in the 6-month daily chart. Here you can see Tuesday, a big volatile day. Wednesday was a little quieter. Thursday was volatile as well, and Friday was quiet again. We pretty much closed where we opened, but there was a lot of volatility in between during the week. We came close to breaking through support at the 12.4 mark here. We touched it once, twice, and then went up. Couldn't break through 12.6. Looking at the MACD and the MACD histogram, we've had the crossover to the downside almost 2 weeks ago, and we haven't really turned higher. But looking at the histogram bars, we're beginning to see shorter and shorter and shorter bars on the negative side, which is exactly what we want to see. Momentum on the RSI is a bit flat, and the stochastic is showing, again, the same flatness, but a jump due to Thursday's movement. Friday obviously was a bit shorter on the volatility side, hence momentum not being there. But again, we had a short week, earnings season. Expect some good news to help push it above 12.6 and reverse the trend that it's been on over the last couple of weeks. We have the nice run up here, 2 or 3 weeks of nice strong growth, and then again, as expected, a bit of contraction. So if anything is expected, it is to see this up and down movement in the sideways of the TSX. Looking at oil over the last 6 months, this is the 6-month daily chart for oil. It's grown by 9.47%, as you can see here on the top left-hand corner, or $9.17. So that's a good appreciation. Not quite the highs here that we've had previously, but again, still positive appreciation in oil. And looking at the stocks, however, it really didn't translate over. Enbridge closed beneath its $45 support line for the week, a large move actually compared to the previous weeks. So there's a bit of definitely a gap or a large downtrend there. And as you can notice on all the indicators, MACD, the MACD histogram, RSI, and stochastic all heading down at a very, very rapid rate. Looking at the 6-month daily chart, we can see the steady decline throughout the week. Tuesday, Wednesday, Thursday, Friday, closed below 45, hasn't quite tested 44, and I would expect it to come down, breach through the 44 mark, poke its head through before turning around. MACD and the MACD histogram, again, we have growing negative bars on the histogram, the exact opposite of what we want to see. We want to see the bars shrink on the negative side, grow on the positive side. So we know that the lagging indicator is saying stay away, RSI is saying stay away, stochastic is saying stay away, stay away, stay away. So if you're going to trade Enbridge, I'm going to wait till these indicators shares turn higher before jumping in. Looking at IMO, this is the 3-year weekly chart. Broke through its 42.50 mark here quite easily and closed much lower than 42.50. You can see the histogram bars are definitely starting to shrink as the convergence divergence on the MACD starts to close on the positive side. So we're seeing that the momentum is moving away from the stock, and the strength, especially when you look at the RSI and stochastic on the weekly side, and you can notice that the slopes of these lines are quite steep. So momentum is definitely fleeing the energy sector for now. This is the 6-month daily chart for Imperial Oil. Again, Tuesday, Wednesday, Thursday, Friday, definite downtrend. Closed below 42. MACD and MACD histogram saying very, very negative. And if you look at the momentum on the stock, you can see it's almost at the bottom of the ranges. The stochastic is pretty close to 0, and the RSI is close to 20 here. So this could signify that the movement out of the stock could be over. I wouldn't be surprised if it came down to 41, poked its head through before it starts to turn around. But be careful. You want to wait until the stock turns before you jump on in. Suncor, 3-year weekly chart. Again, the same kind of chart as IMO. As you can see, Suncor has been very range bound between 35 and 27.50. 35, 27.50. Tried to break through 1, 2, 3. Came back down, up, and couldn't break through again. So on the weekly side of things, again, fell. Closed lower than it opened. Not a good sign. MACD, however, is showing the convergence divergence beginning to grow. 1, 2, 3 histogram bars of increasing length, positive side, but to pull that away, you see the RSI and stochastic coming down. This could be a weekly thing where it just decides to, where people decide to make some profit, get some Suncor off the table, and then we'll see next week as we move higher, or we could see it come down and test 32.50 before either changing direction or breaking through. Looking at the daily chart, since last week we had the amazing run-up. Thursday, this is the Friday, holiday Monday, 1, 2, 3, 4 days of declining highs and lower lows, or lower closes. Didn't break through 33, which is a good sign. The daily side of things shows a bit of a stronger picture for 33. We do have a MACD cross or inflection point here. If it's a strong movement next week, we could see it either touch and turn higher, hence we would see the bars grow, and would see momentum turn to the stock. Now, I would suggest that it looks like it may touch 33 next week and then turn higher because we have the decline of the RSI here, but flattening over the last couple of days. Plus, we have the stochastic heading towards an inflection point here with some strength moving higher. So we could see some positive movement in Suncor, which could, again, buoy the rest of the energy sector. Looking at Royal Bank, 3-year weekly chart, definitely come off the 52-week highs here. 1, 2, 3 weeks of highs, and then a steep decline. Close lower than it opened for the week, and this is in the financial sector was definitely hit last week as the Canadian Housing Mortgage Corporation announced a cap on the amount of mortgages that banks could lend out or be guaranteed for the quarter. So they've given a cap for the year, but now they've given a cap for the quarter to help slow lending. That's a good sign, a bad sign. That's discussed in the Monday mornings, but that's definitely the reason why Royal Bank and TD didn't do as well as we expected. MACD, you can see the histogram bars are shrinking, and the MACD line is turning down. Momentum leaving the stocks quite heavily. Looking at the 6-month daily chart, Tuesday, Wednesday, Thursday, Friday, fairly flat in between this 63.25 to 64.15 range. So almost a dollar movement there. It's really moving sideways as investors aren't quite sure what exactly or how exactly the cap on mortgages will impact the performance of the bank. MACD, we had a crossover already during last week, or the week before that, and we continue to see sideways movements here. RSI heading down, stochastic heading down towards the 20 mark already, so momentum definitely leaving Royal Bank. And as you look at the 3-year weekly chart for TD, same scenario. It put in its 52-week high 3 weeks ago, and then just couldn't maintain it. Lower close here. Not a good sign. Again, partially people are pulling their capital out to take some profit because we had a strong run up from pretty much 80 to 88. So it's a 10% right there. And then we have the mortgage news as well. MACD, the MACD histogram, turning south, kind of flat on the MACD, but the histogram bars are shrinking. And as you can see, RSI and stochastic both heading lower after the strong run-up the stock had. 6-month daily chart, the same sideways pattern as Royal Bank. Not a lot of movement outside that dollar-ish range, but on the technical side of things, you can see MACD saying stay away, RSI saying stay away, and stochastic saying stay far away. So if you're already in, you may as well just hold it for a little bit. But if you're looking for an entry point, look for somewhere closer to 86, unless the stock is heading down. If it's 86 and it starts to turn up, great time to jump in. This is the gold chart, 6-month daily. As you can see on the far right-hand side, gold appreciated quite a bit during the week, so this is going to have an impact on the ETFs that we look at. Couldn't quite break through this level though. Stayed just above 1300. Hopefully we'll see some greater capital appreciation next week. CGL, the Ishares Gold Bullion Fund, with the price appreciation for gold occurring, we do see the ETF gain some steam here. Tuesday, Wednesday were quite flat. Thursday was the growth day. Friday, we didn't have much movement. Still, not a lot of movement. I would wait to get in closer to 11. I don't see it breaking through 12 anytime soon. Histogram and the MACD are both flat at the 0 line. Not much we can garner from there. There is some momentum on the RSI and some good momentum on the stochastic, but that was due pretty much to Thursday's move. We'll have to see some continued appreciation before we can say this is something to jump into right away. This is HGU, the Ishares, or the Horizons Beta Pro Gold Bull Plus ETF. With the good news of price appreciation, you can see 1, 2, 3, 4 days of growth. Came and touched 10, couldn't break through the $10 mark. Looks like the MACD is about to cross up. If gold prices continue to appreciate, it will. We do have momentum here in the RSI and the stochastic. And until it breaks through 10, you may just want to sit because you've already missed the run-up. So it hasn't broken through 10 in a while. It did a couple days, 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 2 weeks. It was above 10, but it's quickly come down. So if you're looking to jump in, it may not be the best time as of yet. This is the HGD, Horizons Beta Pro Gold Bear Plus ETF. Gold price is rising. You can see 1, 2. Thursday was that big day, jumped up. So obviously as the reverse ETF, it fell hard. Friday it fell too. Momentum definitely leaving the ETF behind. Even though the MACD is positive, you can see it's turning lower. If gold prices continue to grow, this ETF will suffer. So you have to take a a bit of a long-term look with the ETFs. Are you going to believe that gold is going to appreciate over the next 6 months, or is gold going to depreciate over the next 6 months? And make your call that way. Silver prices, looking on the far right-hand side of the screen, appreciated quite a bit, and obviously this will reflect well in ETFs. Couldn't break through this level here, but again, turned higher, which is what we want to see. They've been depressed for a long time, down almost 35% in the last 6 months, or $11. So a long way it's fallen, but it's good to see some signs of life. Ishares Silver Bullion Fund, SDR, green, 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 looks really good. Friday it touched the $12 mark, couldn't break through. If silver does continue to appreciate, this ETF will grow. HZU, Horizons Beta Pro Silver Bull Plus ETF, same thing, green, green, green all the way through. We do have some separation here in the MACD, and you can see the histogram is bars are growing. It might be hard to see, but it's at the $8 mark here. Not a ton of movement at all in this ETF. So it's something that we need to watch out for. Finally, we have the Hdd Reverse Etf. Obviously, silver is going up. This one's going to be going down. 1, 2, 3, 4 days of declining. Red, red, red. Very steep. And that's due to the very, very steep appreciation of silver over the last couple of days. There's my email, joelchandler@traintoinvest.com. Check us out at www.traintoinvest.com for our online trading course. If you have any questions, concerns, comments, email me. I'd love to hear from you. So that's it for us this week. Good luck trading during the week. Bye now.